Welcome back to lesson number 7, traders. My name is Stefan Tron. Today we are going to do lesson 7, and it's just going to be a short introduction to patterns. We will go into much more depth in the following lessons on patterns. So first of all, guys, I want you just to make something clear. When you know all the patterns, you really, I can't stress it enough, you really have to memorize these patterns. You absolutely have to know them off by heart. And I mean, there's not so many, there's only a few, and so there's no excuse for you guys not to memorize all these patterns. So what is the patterns and how do we use it? But basically, if you get your impulse move, you can't get a pattern without the impulse move. So you know already that consolidation is going to happen in this area between the top and the bottom. So the consolidation can look something like this, or it can look something like pull back deep or go down. But either way, whatever happens inside here will be the corrective pattern that is forming. And if you guys don't know how the corrective pattern has to look, and when they are complete, the chances are that you're going to miss the next impulse up is going to be quite high. So that is patterns. So some of you might be asking right now is, why does the market make patterns? And why would we form an ABC and then, you know, ABC structure? Or why do we form a pattern? And guys, it's quite simple if you think about it. So there's your impulse, there's your correction, there's your complete pattern, and then you'll get your next impulse move up. And by the way, this is what we call a regular flat. So why does the market make patterns? And then guys, it's quite simple. It's market behavior repeating itself. That's why once you know this, you will see them repeat themselves over and over and over again. And that's why we are able to make profit on a consistent basis in the market, is for that reason alone. So it's basically the market is repeating history over and over again. So that's why the market forms these patterns for us to trade. So our jobs as traders is to basically know how the corrective pattern inside here will look, and to basically make an educated projection of when this correction is actually over and when we can get the next impulse move up. This is how we make money in this business, is by catching the next impulse moves up. I mean, you're not going to make money in this business if you try and trade inside here and only only try to make 10 or 20 pips. You're not going to make money in this business doing that. I myself have had trades that I got over 1,000 pips on one trade, and some, you know, on average it is between 350 and maybe 500 pips. So it also depends on what time frame you trade, I might add. So my lower time frame trades, maybe I'll get like 150 or so, but this is the norm for me. And this is how you actually make consistent money in this business, by catching these big explosive moves to the top or to the bottom, depending what the picture is you're looking at. So other thing I also want to point out, and you guys could go check this out and you'll see that it's absolutely 100% correct. Let's say that this is your your impulse, and then let's say you get a correction that looks something like this. So there's your correction, there's your corrective pattern, and that's basically a regular flat. A regular flat will break this bottom over here, and that's how you know that it's a regular flat. If it doesn't break the bottom and only comes to here, then it will basically be a contracting flat. But either way, you will see these patterns happen in a 1 minute chart, 5 minute chart, 1 hour, 4 hour, monthly, weekly, daily. This happens in all time frames, guys. So that's why we say the market moves in fractals. But please, I ask you not, I beg you, don't go and try and trade these patterns in a 1 minute chart or a 5 minute charts. I've seen traders that try and do that, and they wiped out like you wouldn't believe. So don't try and do this. I myself make the lowest time frame I would enter a trade is on the 1 hour. There is exceptions, and you'll still learn about this, but my exceptions would be where I would let's say this is a daily impulse move coming up, and I see a move coming like this and coming like this, and it reaches, this is what we call an extreme level, and I get a 15-minute setup, then only then I would enter on a low time frame and try and catch this next move to the bottom. And I at least want to have 200 plus pips that I have to gain. So that's the only time I would trade on a low time frame, on a 15-minute time frame. But we'll go and look at examples, in the future lessons on that. So let's get into it and discuss what type of patterns we do get. So first of all, the first one, and this is the easiest pattern that you will get, is let's make this a different color, is your regular flat. Your regular flat will look something like this. So this is your regular flat, and it must break this low for it to be classified as a regular flat. So you can just say RF, regular flat. And remember, this is our B wave. Remember I said the B wave will always be messy in the middle, and then you will always get two impulses in your correction. You will get two impulses in the opposite direction of your bigger impulse. So there was the first impulse, and that was the second impulse. If you just remember this, it will already make your life easier to identify these patterns. Remember, in a corrective pattern, you will always get two impulses in the opposite direction on the lower time frame. And then, so that is what we call a regular flat. In the next pattern we will go into is what we call a contracting flat. Let's make it blue. And basically a contracting flat is if you go up and you come back, but you don't cross that high and you don't cross this low, and then it comes here and you make the next impulse move. Let's make the impulse yellow. So this is basically a contracting flat. And once again, remember, your B wave will always be messy. There's quite a few variations that this B wave can form and look, but remember, there's your first impulse, there's your second small impulse, and then there was complete, that made our next move up. So this is what we call a contracting flat. And then the next corrective pattern that you will find is what we call an expanding flat. So your expanding flat will look something like this, and it will break the top, and when it comes back down, it will break this low. So this is basically how your expanding flat will look. And after your expanding flat is complete, at some point you will get your next impulse move to the upside. So this is what we call a contracting flat. Expanding flat. This is what we call the expanding flat. The next one, and these are a lot of people's favorite, and a lot of traders battle with this pattern, but once you start to practice and you learn to recognize them, they're actually not so daunting, is the running flat. So the running flat will break the top, and when it comes back down, it will not break the bottom. So it will come to somewhere here, stop right there, and then reverse up. So basically this is how your running flat will look. So this is what we call a running flat. And then the next two patterns, they don't happen they're quite rare, but you have to know them as well. And this is what we call the triangles. The two variations of the triangles we get is the first one. Let's do expanding triangle first. 1, 2, 3, 4, 5. So basically this is how your expanding triangle will look. And what you will notice about an expanding triangle and a contracting triangle, they've got 5 sharp waves inside of them. They don't have they don't look like the other corrections. So this is basically your expanding triangle. And then your contracting triangle will look like this. It's 1, 2, 3, 4, 5. So that's how your contracting triangle look. Once again, it will be sharp waves, and then after it's complete, you'll get your next impulse move to the upside. And then the other two is the ending diagonal, but you guys already know. We'll go into much bigger depth how the ending triangle looks, but the ending triangle looks something like this. So you'll get an impulse correction, and then it will start to compress, and your impulses and corrective patterns will start getting smaller until it breaks the ending diagonal and makes a reversal. And then the other one is remember the ABC squeeze, and the ABC squeeze will look something like this, and then you'll get your reversal to the downside. So that's basically the different variation of patterns you get. Like I said, there's not so many, so you should memorize all of them, and we'll go into the charts in a second and see how they look in the charts. So here in the charts, let's go to a monthly and see how those corrective patterns would have looked in a monthly chart. So basically we had this impulse move down, and then we had this contracting this regular flat monthly regular flat pattern, and once it complete that, we got the next very good impulse move down. So remember what I said, inside this monthly correction you're going to have two impulses. So if you go to a weekly, you'll see that there was your first impulse move, there was your second impulse move to complete this monthly regular flat, and then inside here you had your messy B wave. So let's go into a weekly and see how that looked in the weekly. Let's scroll back. And then basically here on the weekly, you can see you had this impulse move, and then here you had a contracting flat, and then it went up, made the next impulse move, and then we completed on monthly regular flat. And after that, if you were very good, you could have gotten in there and traded this all the way to the downside. And then if you go here, what's this? Your favorite pattern. Here you had your regular your running flat, and then we formed the next move down. So let's go into a daily and see what we can see in the daily. So currently on the daily, we are forming another running flat, and probably to get this move down. So let's go here, let's scroll a bit back and see what we had on the. So here you can see here we had this move, and then we had this this contracting flat over here, and then we had this move down. And then as we can see here, we had huge divergence. We had an ABC, so we could have expected the reversal, and then we had this up move here, then we had this contracting flat over here, and then we broke, formed another smaller regular flat on the lower time frame, and then if you look on this daily, we formed another running flat over here. So there's your first piece, there's your B wave, there's your last piece to complete it, and then we went higher. So as you can see, once you learn to identify these patterns, you can identify them on all time frames, and it becomes a lot easier to trade them. So that's basically it for the introduction on the patterns. We'll go into much more depth in the patterns in the next few lessons.